While everybody's looking for the Bitcoin top, is the market going to crash? What's going to happen with the alt season completely dead? Everything is different this time. We have got a Wall Street insider who's also been a CEO of a major crypto company in crypto. So we got to dive into this. I'm getting this retweeted out right now. Happy Saturday morning, everybody. Hope you're having a wonderful day. We have some key signals that some people are just not paying attention to, but for a market veteran who knows exactly what's going on, this is why we want to get these people to you, every single one of you that's tuned in here on BitLab Academy, here with the family, the Discover Crypto family, everybody here. Let's make sure that we rock this together, because this is one chance in a lifetime to take advantage of basically the replumbing of the entire financial ecosystem. So everybody, let's dive into this together. Let's get into it right now. Let's go. Bitcoin and crypto, the most exciting market out there. You're going to make so much money, yet everybody's feeling like this right now, where it feels like the market is just burning behind you. It's promised you profits, but what's going on? I think it's this key point right here. Market can remain irrational longer than most can remain solvent. So I got a key guest. I'll call him a Wall Street insider, but no, he has graduated far beyond that. It's our friend of the channel here, Mr. Dave Weisberger, who's been in markets for quite a long time and been building in the space as a very articulate investor. Dave, thank you for being here with us again. What is going on in this market? Is it over? Is it not what we expected? Or is it just more setting up that we for the market? So we just need to be a little bit more patient.
Well, first of all, thank you for having me on. And while I've been around a while and I've seen a lot of things, I would say that the broader market is somewhat rational. I'll talk about why. The Bitcoin market is, I don't like the word irrational, but it's on sale and probably has the best risk return that it's ever had in its life. And if that general setup makes me sound like a Bitcoin maxi, I apologize. That's actually not the case. I am a Bitcoin maxi when it comes to the use case of hard money and a store of value. I think Bitcoin is the only crypto that will be in that spot, and that will become very important over time. I do believe there will be quite a bit of value created in the crypto sphere, but I think what's going on in what people euphemistically or over broadly characterize as the altcoin market also makes sense, at least in a sense. So let's just talk about what are the things that we know. So here's what we know. Bitcoin is in a trading range, has been in a trading range, and it's a very, very tight trading range. This is now the 7th week of a 10% trading range for Bitcoin. And that trading range, that 10% range is actually not even really 10%. I mean, it's really been between 103 and 108, which is less than a 5% of the range. But yeah, you've had a couple of candles that pushed us up to 112 a couple times. And we flirted with 100,000, like 102 a couple of times. But really, we're right now settling toward the bottom of what's been a range for a pretty fair amount of time. And when you look at it that way, that looks like a normal range, what you're looking at there in that chart. But if you zoom out and look at that in percentage terms and compare it to other periods in Bitcoin history, it looks microscopic, because in fact it is. Now, last summer, we were sitting here for about 8 months as we waited to see what would happen. And think about last summer, we were at the tail end of the Biden administration, otherwise known as the Warren administration, which was openly hostile toward crypto, openly hostile toward Bitcoin, openly declaring war on founders and entrepreneurs in the space by weaponizing the banking system. And yet we were in a trading range that couldn't go below the previous all-time high with any authority, which was in the high 60s, and effectively, and was bouncing up against, what would become the new high pretty quickly after Trump was elected. So it was an 8-month range. Well, now what's the environment? Well, the environment is an openly supportive administration with Bitcoiners at the Secretary of State, with a Bitcoiner in the White House as the crypto czar, with the president and his children declaring Bitcoin as one of the great risk reward assets of our generation. What do you think is going to happen in the long run? So honestly, when you start talking about Bitcoin, the market right now, it's in its pause breather phase, but we're going where we're going. Yes, if there's a world war that breaks out and oil prices go to 150 and economies get crushed, sure, like everything else, Bitcoin will be sold. And the reason Bitcoin will be sold in that scenario is because of a famous Wall Street aphorism. And this is older than me, by the way, which is telling you something. It is people sell what they can sell, not what they want to sell. So what does that mean? Well, Bitcoin could be sold during the weekend, it could be sold at night. It's highly liquid. And a lot of what people own are private equity or venture capital, which you literally can't sell unless you're going to take a massive haircut off the bid. And so Bitcoin does tend to lead on legs down. I actually think the probability is weighted to a leg up more than a leg down, but we'll get to that later. Now let's talk about the altcoin market. And in the altcoin market, I had a thesis, and you might remember this because I said it with you on one of your shows, which is that 2025 would see the birth of the utility token and utility coins outperforming non utility coins. Now, I got it right in one sense and wrong in another. I got it right in the sense that investors want to invest in utility. And we have seen that in spades this week, but not in tokens. They want to invest in real economic value. So, what could they get in real economic value this week? Well, it's called Circle. So we have an IPO of a company where you're getting equity, you have ownership and full pass through of economic rights to the users, as opposed to a token where nobody can give you a straight answer of what the, excuse my language, but what the fuck do you own when you own, even Ethereum? What do you own? What do you own when you own Solana? What do you own when you own XRP? That one's even harder, where 40% of it is owned by one company. So, what do you own when you own a token? What economic rights do you get? What's the supply demand dynamics going to be? How do you economically model it? Now, some can be modeled, some really can't. There's many more that are in the can't than are in the can. And anyone who tries to model the economic value of a governance token is lying to you. And that talks about some of your personal favorites, the Ondos, etc. But where's Ondo's value from? Ondo's value is, does it turn into Circle? Do they figure out a way to pass on economic value as the chain gets adopted to the users? But what you've seen here is voting with their feet. The market is saying, hey, if you could pass through economic value, and we know that an equity does that, I want to own that equity. So it started at 5 billion, and what's the market cap now? 40? Well, that's $35 billion in value created. So when you look at your altcoin charts, you got to add that in, because honestly, that's where a lot of the selling pressures come from. It's from people saying, okay, I got these tokens. Maybe I should buy some equity in stables because stable coins are going to be the next big thing. And we kind of know that's true. And so that's what's going on. Now, what's the real meta trend? Well, the real meta trend for your investors is figure out which tokens that you're buying actually have a use case and will be able to pass on some of that economic value to investors. It means that a meme token, if you want to buy it, know that you're selling it to somebody who believes in the meme more than you, or after you've taken profit, and don't be the guy left when the music stops holding it. That's what it means. And you could argue with me as much as you want. Oh, but community. Okay, great. Where's the monetization of that community? Until there is a method to that. It doesn't have to happen on day one. Now, like for example, the only meme coin that has a path to monetization that I know of, and I shouldn't say the only one, there's a couple, there's different ones. But let's take Doge. If in fact Elon makes Doge, because it's a proof of work coin modeled after Litecoin, we know the history. If they make Doge into a payments vehicle inside X, okay, cool. Now I sort of understand where its value could come from. If not, I don't understand where their value and I think there's double digit billions that come off its market cap. You look at something like Pepe. Will Pepe holders get rights to a Pepe ecosystem, which uses the very popular character and licenses it out, etc.? Will those economic rights be passed on? I don't know the answer to that question, Kelly. Maybe you do, but I'm not going to touch it with a barge pole until someone could explain it to me. That's what we're seeing this week. And the performance of Circle is probably the single greatest, most obvious tell that that is what the market is desiring.
Well,
New
and
money
we're
flooding
and
in.
we're seeing the broader
Really
things
quick.
too, looking at Bitcoin, and then people look at the previous cycles, and it kind of, even myself, I blow my mind sometimes with ignorance and bias, looking at previous market cycles in crypto and expecting that, yes, things are not different this time. Things are different this time. That argument always comes up, but there's a real case, like a substantial case, that things are different this time. We have
Yeah, there's
Bitcoin
two reasons.
proxies. We have similar scientific GameStop, MetaPlanet, a strategy where there's been a lot of liquidity flow in those directions. Altcoins, well, we've seen the double, the multiple ICO phase, the DeFi summer, the gaming's, the AI, and now we've got the meme coin cycle that really just completely bled out all liquidity and excitement around that. And I think it's like getting down to like, no, here's the capital that's really moving the markets, even the altcoin markets before. They've made a lot of money and they're like saying, hey, let's put it in these other new areas that have some sort of relationship with Bitcoin. And if not, then, like Circle, for instance, the infrastructure and utility plays. Do you think there's going to be a potential, any sort of resurgence of an alt season, or do you
Of
think the alt
course, but it
season
won't be
narrative
what
is
you
dead?
expect. So first of all, I want to debunk one thing. This time is different always gives me the heebie-jeebies. I hate when people say it, unless there's math to explain why. But the math is compelling. So right now, the halving cycle went from 900 a day to 450 a day. In percentage terms, compared to new demand, that is went from significant to insignificant. So why do we expect the trading to follow what is a every single halving cycle is a marginal decrease in how important the halving cycle actually is? And now we're at a phase where between ETFs and company and corporate treasuries, it dwarfs the change in demand. So why do we expect the cycle to be the same? I mean, the answer is we shouldn't, right? The real question about the Bitcoin cycle is the one that hypercritics such as Justin Bond say, which is, and I don't think he's right, but his argument is at some point the halving rewards will not be sufficient enough to protect or defend the network, which, considering the incredible growth in the network, is clearly not true yet. And clearly nobody expects it to be true in the future for lots of reasons, game theory, sovereign, etc. But other than that, I don't see the halvings as mattering. The political cycle, which corresponds to the halving cycle, which is a 4-year presidential race, now that matters. And I've talked about this extensively. I do think there's something that matters there. We have 3 more years of this administration, and we have a huge event coming up in 18 months, which is midterm elections, which we'll find out whether or not it's 3 years or we go into stasis. Now, we know for 3 years it's not going to be openly hostile. We know that. That's certain, right? We may get market structure legislation, which makes that any future hostility really, really hard to do. But we won't know whether we have anything close to a perpetual cycle until we know whether we're going to be able to get all this stuff done. So this week's passage of the Genius Act in the Senate, it's not done yet. It has to get through the House, but its bipartisan support in the Senate is extremely important, and the market ignored it completely. Think
I,
about it.
it's
Now,
it's
when I say
it's
it's extremely important, it basically is if we got the Genius Act and a Market Structure Act, which allowed for entrepreneurs to raise money using tokens without the accredited investor rule that pass on economic value, which is the holy grail. And we have stable coins becoming the infrastructure of our financial system, meaning that buying said tokens from inside the financial system becomes easy as opposed to very, very difficult. Anyone who's ever tried to do a bank transfer from any of the money center banks to Coinbase, Kraken, or Gemini understands what I mean by difficult. It is a dramatic effect that is not being priced into the market. But at the same time that's happening, we have geopolitical reasons and risks and people worried about this and that. And we also have one of the most successful IPOs, arguably the most successful IPO in a very long time, from a company that provides the infrastructure for a lot of what I was just talking about. And so investors are clearly interested in crypto. There's no doubt. It's just taking a different approach. People buying memes? Are they buying fart coin today? Are they buying, smaller, blockchains? Are they buying Sui or even, BitTensor, the one of the favorites of our cryptos are? I mean, those are down 30. BitTensor's down what, 30% over the last month? I mean, that's a pretty sizable move, right? That's showing you that excitement in altcoins, even potentially the highest quality of altcoins, is at a real nadir. I don't sell at naders. I sell at fervors and euphoria. But the altcoins, even the higher quality ones, don't have any excitement.
well,
So when you ask me, are we going to
it
see a
sounds to
resurgence at
me
some point? Yes.
It
But
sounds to me
when
like you're kind of highlighting a couple things. One is the dispersion of liquidity, the different opportunities that are out there, right? From the proxies to okay, Circle major for the crypto ecosystem. Why did the market not really react? Maybe the market did, but it was siloed in, I mean, the big money players, they're probably getting involved with that and other aspects. But then you also see other things like this. Do you hold much water to these ideas of the market making and the markets being muted by what's going on with Wintermute and Binance? Or is this just all a bunch of noise because that's how markets work anyway? And the
complete
market's
bullshit.
going to move up when it's ready.
It's complete bullshit. Market
Mhm.
makers don't do anything to make it obvious where the hell they're positioned. They do everything they can to avoid it. The perpetual swap markets are still 5 times the liquidity of the of the spot market, right? And if you're a market maker and someone wants to bid wanted or offer wanted, what are you going to do? Are you going to source coins to sell to them? Or are you going to hedge? Are you going to make a price based off of where you can hedge yourself in the perpetual swap market and then work out of that slowly? The latter is what they do unless they have natural other sides on the desk. Now, Wintermute is talking to buyers and sellers all day long. If they can match buyer A with seller B, sure, they'll do it, but they don't pre-position inventory except for arbitrage strategies, except for things where there's mispricing between exchanges. And even there, they don't have to pre-position it because since all the exchanges are linked by fire blocks, they could move it like that. And so people who look at the supply dynamics on exchange, that is it's worse than fighting the last war. There was a point in time when it was true, but it was so long ago that right now it's just used to obfuscate. Let me tell you a story, Kelly. Back in the old days when dinosaurs worked the earth and I was implementing a new technology for making markets inside of what at the time was Solomon Smith Barney's before Citigroup, but the same company. I sat in on the initial course that traders taught the junior traders coming on the desk. So a junior trader comes on the desk and they get an order. Client says, I want you to buy for me 250,000 Microsoft shares. What's the very first thing they were taught to do? Well, let's place an offer for 250,000 shares above the market. And then we'll put small bids out there and hopefully people will be dumb enough to chase down and hit our bid. That was literally what they were taught. By the way, that today is called spoofing. It's actually illegal, but it doesn't change the fact that the mindset of traders, of market makers, is always to mislead the market. That is the default position. So anybody who believes public data, on-chain data of where you move coins is going to be relevant in a particular direction, take the opposite side of that. It may not have any correlation, but if it does, it's a negative correlation.
Well, here's a great example. I was going to highlight this. The demand momentum negative right now is basically the lowest it's on record in this chart. And yet the price is holding up dramatically well. If you were to think, I mean, if you saw just this portion, you'd think the market was
How is this
going down.
calculated, Cal?
I haven't looked into this one. This is one of the charts shared by CryptoQuant. I think
Okay.
it has to. I honestly, I don't know, but it
I'd
just
love to hear
highlights.
it. If you get both of us on, I'd love to ask him because if it is focused on the crypto community, i.e., previous crypto holders, then that chart tells you everything you need to know, which is the crypto community has been selling into a voracious appetite consisting of companies looking to acquire Bitcoin for its balance sheet, ETFs, which is really an aggregation of smaller and mid-sized investors, and funds who are looking to accumulate Bitcoin and don't and all three of those don't want to be buying when it's on the other way where it's pushing the price up. They wait for the sales and they buy as the market is coming down. But what does that do? That cushions volatility. That explains why one of my other favorite charts, and one of yours, I know you have access to this, the Bitcoin volatility index on both a 30-day and a 60-day level are bouncing around bottoms and that's not surprising, right? So that's kind of a big deal. So that has been my working thesis, and all the market dynamics just tend to reinforce that. But what does that mean? Do we think that the crypto world, that the people who all the hot money, which a lot of it, by the way, is probably in Circle, a lot of it is on the sidelines because they're worried about nuclear war in the Middle East, whatever. That hot money is gone forever? Do you believe that? Well, if you believe that, then I used to have a view when I lived in New York of a bridge that I'd love to try to sell you, because of course that's not going to be the case. That stuff is goes ins and outs, and when you get toward euphoria, they're piling in, and we've been in a situation where they've been lightening up. Now, yeah, there are some crypto folks. There was a whale that sold $30 million worth of Bitcoin this morning, I saw. Well, okay. I mean, if you bought Bitcoin and owned it from 1,000 or below, and you can make, effectively, 100
31.
times your money on a sizable amount of money, and that those dollars will set you up for the rest of your life. Well, that's called life-changing money. Why wouldn't you take it? And so you've seen a lot of people doing that. That's logical, right? It's logical. On the other hand, if you bought between 10,000 and 50,000, it's not life-changing money, but you might lighten up a little bit because you might have expenses. You might, you want get the GI Joe with the Kung Fu grip for those who Trading Places fans out there. There's reasons to do things. But the truth is, holders, sorry, I usually leave these things
Well, on your note, I wanted to highlight something there because you just said something very important that I noticed on the reserve risk chart that highlights that explicitly. There's going to be people that take money out of the market, they sell, they have different life events, they have different ideas about if Bitcoin's even a long term hold or if they're in it to make money. But you look at the different composition of the types of people that have gotten into the market, the maturation, the maturity that has come into the types of holders, and the fact that we really haven't had retail come in yet in a big way, which I'm excited about because the market is showing strength. I mean, looking at this, the reserve risk has been basically down in a quote unquote buy zone, a good asymmetric buy zone, the entire bull market since January 2023, all the way this entire time, even with the peaks we've had. And this is basically waiting the coin value days destroyed, basically old coins moving versus weighted against the HODL bank, showing that there's a lot of maturity that's come in and that we're still at a relatively incredible buy opportunity so long as you are a HODL type of person. The upside is still tremendous, even at the levels where people are getting worried.
Yeah, I mean, look, as I said, I bifurcate this market. Bitcoin has probably the greatest risk-adjusted asymmetric return upside that it's ever had. Yes, when Bitcoin was trading at 10,000, it had 10 times more potential upside. But the risk that it faded into irrelevancy with a hostile administration, without any real champions in finance, without any state actors whatsoever involved, except for El Salvador, and even they were being chastened by the World Bank. You might have noticed El Salvador is continuing to buy Bitcoin. Why do you think that is? Well, the reason is because the World Bank is scared to death that Trump will defund them. And so the last thing they're going to do is enforce their directives that say, no, you guys can't buy Bitcoin. Well, that's a very big deal, dude. That is huge. Bitcoin becoming a reserve asset recognized by the US government is not small, and that de risks a lot of the future return. Now, I am not someone who thinks you invest looking for 100 or 1,000 X's. 10X is a huge deal. Now, we might get 100X in Bitcoin or more, but if you do that, and I'm going to quote my new friend Maurizio from Leaden, because he made a great point. He said people who buy houses are effectively making money, they think, because they're shorting the dollar with leverage. Because it's not really the value of the house that's going out, it's the value of the dollar going down.
Mm.
So if you hold Bitcoin in $25, I would make the argument that the likelihood of much more than a 10x is really, really small. Now, you could get more than that if it gets a bigger percentage of the financial system than gold, etc. But if you believe $25 in the continuing melting ice cube effect, such that people are chased out of dollars into Bitcoin as more of a reserve currency, well, at that point now all bets are off. 100 or 1,000 X's are on the table, but it's because of looking at it versus dollars. The way where I'm going to quote him is his great analogy was people doing that and thinking that they're making money, and that the house is going up and dollars are staying stable, are no different than the pre-Copernican scientists who believe the sun and everything revolved around the earth. The truth is, that's not the case. Where there is the dollar, and in fact, all fiat currencies are weakening and will continue to weaken.
Well, you know what? This is at such an interesting intersection with what's happened over the last 6 years, coming out of the global economic shutdown, because something happened in a way that I don't think the global elites were really ready for. The world shut down, money printing went, I mean, beyond exponential. We've had 80% of the dollars that have ever existed printed. That translated into very quick inflation that wasn't spread out over a good period of time. And this is at the same time where social media has become an absolute sort of tied into our life. So there's a dissemination of information like never before, and the awareness around these things because you're feeling it at the grocery store. So this is also at the same time Bitcoin's coming to a global stage. It's almost like, are we living in a simulation, or are we just lucky that this came on our
No,
radar soon?
let's unpack that, because when you look at inflation, and economists fuck this up routinely. In fact, a lot of really younger economists are totally wrong on this. Inflation, as Milton Friedman always famously said, is always a monetary phenomena, right? It's just the divisor of, everything divided by the amount of dollars or the amount of whatever. And that's true. But the type of inflation matters. There is what the policymakers want, what they've wanted, and what they lost sight of, which is asset inflation, and what the policymakers hate and try to control, which is consumer inflation. Now, there's two other forces going on here. Consumer inflation has been relentlessly driven lower over the last 30 years due to technology, productivity, et cetera. And we arguably have one of the greatest, most relentless drivers of that just birthing now in AI. So consumer inflation was driven lower by outsourcing and by technology, et cetera, such that the cost, even in dollar terms, to produce a shirt is the same today as it was in 1980. We're not talking just computers. Computers, we know Moore's law, et cetera, goes up, whatever, exponentially. We get all that. But we're talking about all manufacturing has gone down significantly in real terms. It's not even close. And so if you look at the constituency of the CPI back 40 years ago versus today, they're vastly different. And oh, by the way, weighted to take advantage of that difference so as to create the illusion that that inflation is not as big. Now, what does productivity not help you with? Well, it helps you with energy, right? Oil production. The reason oil hasn't gone up crazily is we are much better at extracting oil than we ever used to be. It helps you with food, although one could argue that the kinds of food that are being created by technology is garbage and is killing our population. I think you and I have talked about that, and we do tend to agree on that subject. I it's just, yeah, I don't want to go down that rabbit hole, but still the ability to connect it. What doesn't it do? It doesn't really help you very much with services. It certainly doesn't help you with education, although AI will. Colleges, watch out, because talk about the worst possible money you could spend. $250,000 for a college degree compared to sitting with a couple of TAs in a room, fed by AI to learn what you want to learn and teach, is going to be one of the most ridiculously dumb things that people spend money on. People may still spend the money to give their kids the college experience. We
The
all know what that
pedigree.
was.
Yeah.
Yeah. Well, no, I don't know very many people who didn't enjoy their 4 years of college, right? It's fun, right? You get to hang out and experiment on all sorts of new different things. And there's something to it, right? Being able to, actually debate or talk about ideas, et cetera. Colleges, they don't do that anymore, because if you don't follow the exact thing, you're kind of, off to the side, but we won't go there. But the point is, what happened in the pandemic were two things simultaneously. Number one, supply chains got fucked. What did that mean? That meant that all those productivity gains reversed. All the globalization gains went in reverse, causing massive consumer inflation. At the same time, as number two, they put money directly in people's pockets. Those stimulus checks. Yeah, a lot bought Bitcoin and bought other stuff. I mean, all you got to do, and I did the drive from New Jersey down to Florida right when the first stimulus checks hit. And every hotel along the way was full of people partying. And when I asked people at the front desk what the hell's going on in Dillon, South Carolina, why is a Days Inn full? Well, Days Inn is full as people had money in their pockets. They spent it. And they bought used cars, went completely insane. Boats went crazy. All sorts of stuff like that. And forget food. Everybody was eating out. Everybody was changing their diet until the money ran out. And so you saw massive spikes because the supply chain's constrained, and massive consumer, putting money in the hands of people. It was a reversal of decades of policy which tried to push inflation towards assets. Now, do I think that we should be pushing inflation toward assets? Actually, no. I don't think that wealth inequality is a great thing, but that is the fiat policy of ever expanding money printing, coupled with expanded regulation and more power and control to the government. That creates wealth inequality. But when you reverse that in a couple of years, whammo. And at the same time that the previous administrations both, and it started under Trump, to make, as much as he doesn't want to admit it, but the massive budget deficits. I mean, everyone likes to quote Lynn Alden these days, nothing stops this train. But when we're at peacetime and we can't cut a $2 trillion deficit, when we have, effectively 4.3% unemployment or 4.2% unemployment, we got a big problem, right? And that problem needs to get solved. Most people in Bitcoin would say it won't get solved, Kelly. And so we're going to have to inflate our way out one way or the other. And that's why the government wants stablecoins to get people to buy treasuries to lower interest expense. That's why they want Bitcoin, and they will be buying it. Make no mistake. They're not going to tell you until after they've done it. They want to come up with every way they can to offset these structural deficits, and we'll see what happens. But I'm not sure that there's political will to do it.
What's crazy about that is the Operation Choke Point 2.0, which obviously has been uncovered and been a real thing with the foot on the industry entirely about how bad the crypto ecosystem is. Now we have the Genius Act that passed Senate, now going to the House, hopefully get signed into law. And essentially, it's ushering this time period where stablecoins are likely going to be the largest drivers of adoption of crypto, which is interesting. I wouldn't have thought that 8 years ago, but also likely going to be part of, not the only thing, but part of the savior of the broken bond and US Treasury system because of all the buying that's going to happen. And interestingly, you said something else about the US buying Bitcoin and the Bitcoin reserve earlier today. And this has been said multiple times. Cynthia Loomis was talking about Bitcoin strategic reserve is the only solution for America's national debt. And I'm curious your thought on this because I followed this up this morning is, do you think that could actually happen? Because every time we are able to generate money that's available, much like the $500 billion saved from Doge, now we have a $5 trillion further expenditure. We find more ways to spend money. Do you think it's actually possible in our lifetime we're going to get some sort of balanced budget or a reduction in debt because of something like Bitcoin? Can that eclipse the poor spending, or are we doomed? And either way, we need to stack into a Bitcoin treasury.
I hate answering words like is it possible because the answer is almost always yes. But let's talk about likely. As long until there are term limits or a restructuring of our political system such that both parties have incentives to line their own pockets at the same time as spending from future generations, where politically it's suicide to try to cut things that people are used to, it's going to be really, really hard. Now, I mentioned term limits for a reason because, look, the fact that we can't cut back, just look at the rhetoric of the Democrats and the Republicans are afraid of this rhetoric. So Elizabeth Warren will scream, "Oh, we want to cut Medicaid back to levels last seen since 2019." Huh? You're going to be destroying the lives of millions of people if we go back in spending to where we spent 6 years ago. Inflation adjusted. Think about that.
Yeah.
How absurd is that? Yet that rhetoric scores political points. So everyone's afraid of it. I mean, that's insane. It's truly insane. It's insane that people believe that there's half the country believes it's okay for us to provide the same benefits to illegal immigrants as it is to citizens. Because after all, money grows on trees. We may see not a socialist, a Marxist elected as mayor of New York. Of New York. This guy, his understanding of economics is worse than someone who studied, who got their economics degree out of a Pop Tart box or out of a Cracker Jack box. I mean, he thinks that that the economy is X, and you could tax infinitely, and the economy will stay at the same size. Worse, in a regional economy where people can leave. I mean, frankly, as someone who's long Miami real estate, part of me thinks that if he wins, my condo is going to double because who's going to be left in New York?
Yeah.
Why? You've been to Brickell? It's a lot nicer than Fidei. Yeah, you got to deal with a couple months where it's hot, it's a little bit hotter. But the truth is, they're all in the Hamptons anyway. No one's going to live there if their state and city taxes go up 25%, and that's what this guy wants. And yet we're actively talking about it until there's a reckoning and people realize just how bad policies that tax and spend and have no governor on it. Until there's that reckoning, it's not going to change. Now, the hopeful part of me, Cal, hopes that the reckoning will be Bitcoin, not in a bad way, but that those who are invested in it make money and preserve their wealth. I say make money because we're waiting for the network effect to get there. But once it does get there, it still becomes wealth preservation. But once that happens and there's a scorecard which says, okay, because Bitcoin could go from here to 100 or here to a million, and it doesn't say anything about the US, about the fiat system. That's just becoming digital gold. But it going from a million to 10 million, that says worlds about the melting of the ice cube and what's going on. And that sort of scorecard is exactly why Elizabeth Warren hates Bitcoin, because she knows this and she doesn't want anything to basically stop spending other people's money. So when you say, is it possible? I mean, obviously it's unlikely until there's that scorecard. And that's why gold bugs and Bitcoiners both really want to see a free market on those assets so as to show the scorecard of why profligate spending matters. Because until it matters to people, it's like, who cares? Politicians will wave their arms and say, oh, this is bad. There are a few who actually believe it, but they're not going to do anything, not going to get power because they can still be voted out of office by people who are saying, well, this may be bad for my kids, but what about me right now? I need that money. Right. And so that's my answer. And I wish I could be more hopeful. That's
No, I
why,
mean, I
when
think
Larry Leopard says the big print is coming, I think we're going to get a series of escalating prints, not any particular one off, but I don't
well,
see
the,
anything
the
stopping
problem
it.
now is I think that they've kind of grown wise to it. The financial mechanisms that are in our government now, it's not just, hey guys, they're printing money. They're doing everything from rolling money out of the TGA, Treasury General Account, to doing, they just softened the SLR banking requirements for the collateral for treasuries and other assets. And I mean, they're doing all these things moving, but now we have this whole sub niche on the outside of this stable coins, which I saw yesterday. Somebody posted this ability for the treasury in a way to do some stealth QE as well by basically issuing US treasuries basically through what they're doing with stablecoins, which they haven't really had the ability to do for decades because the Fed is, for the most part, in the control. But the whole point of this is Bitcoin is this thing, quote unquote, outside of the system that feels like it's being co-opted by the system somewhat, but it still programmatically still gives you access as an individual to participate. So I know we're going to be wrapping up here in a second. So I'd love to ask you a question that there's an argument going on right now, or just a disassociation of what the truth might be in terms of the 4-year cycle. The 4-year cycle says sometimes we should basically hit that top sometime, probably September to November. But then there's other aspects when you're looking at charts, like this, when the crypto administration, this new administration that's empowering the regulation and the path forward and stacking and setting up executive orders, that maybe this time is a bit different because of that. We're having all of these major corporate and institutional and potentially state and sovereign treasury stacking in. Do you see, are you kind of 50-50, or do you see one more likely than the other of having some sort of notable market cycle top with a substantial pullback, like we have seen for a year and a half? Or do you think that this might sort of push into 2026 and potentially just stair step up like we've seen the last year and a half and change the dynamic of what we're expecting in the Bitcoin cycle?
Okay. First, we've already seen the hype cycle. As I just told you, alts are down huge from the cycle top. They've already had the normal 4-year cycle correction. Let's just start with that. So understand that Bitcoin is divorced. Bitcoin dominance, whatever. You got to take stable coins out. But I mean, what's Ethereum down? It's still 50% below its all-time high, and it had, etc. You have Chainlink up there. You and I both think that Chainlink provides an interesting amount of utility. I still want to see what the hell they're going to pass to token holders, but same thing, 50% below its all-time high. I mean, they're all roughly around the same. So we're seeing cycles. So understand that this notion that there's going to be a rally and then a pullback. Well, I don't know what it is we're talking about. So let's just forget alts for a second. I think there's going to be different ones for different ones, and we'll have to cycle it. But Bitcoin is interesting. I told you the political cycle, I believe, is more important than the halving cycle by a lot. What do we know for a fact? I'll tell you what we know for a fact. We know that money supply, not just M2, but M2 is a proxy. You have to put in money market funds, other things in it. But liquidity is probably the greatest single driver of Bitcoin. We know that. Okay. Not a question. We know, we know that the peak of global liquidity, certainly of US liquidity, is highly likely to be somewhere around 6 months before the midterms. Why do we know this? Because they want to get reelected. And the administration is going to, Powell's term will be up, curiously, 6 months before the midterms. They're going to have it pre announced who his replacement is going to be well before that. I mean, Dr. Donish, which we've been on Spaces together, he makes an interesting point. I think he's probably right that Trump is going to appoint a shadow Federal Reserve chair at some point in the next few months, maybe next 6 months, whatever, but it'll be well in advance of Powell's term expiring. And so the market will know what's coming. When do they want money supply to peak? When do they want liquidity to peak? When do they want people to feel economically good so that there's a chance of preserving the Republican majority in the Senate or the House or both? They want that to peak in the summer when early vote before early voting starts, which curiously is when Powell's leaving the Federal Reserve, and it all lines up. Ask yourself the question, do you want to be short risk assets going into a time, quite literally a year from today, when the government has every incentive to absolutely short squeeze the hell out of you? Because the wealth effect is very real when it comes to voting. Ask yourself that question. Do you want to be on the other side of it? You might end up being right. I mean, the old idea, don't fight the Fed. I mean, you can fight the Fed and win if you're very nimble and you trade in and out, etc. But you're asking me a question, do I think it's going to peak 6 months before the period of time when I think is most likely is going to be engineered to peak? And the answer is no.
Yeah.
The answer is no. Occam's razor, dude. The simplest solution is usually right. Do I think that Secretary of Bessent and David Sachs and the president and JD Vance aren't sitting in a room at times talking about, like Mel Gibson in Braveheart, hold your powder, hold. Let's wait until it's right time to really hit the gas? Of course they're doing that. Of course, because it's the logical thing to do. And it has the extra benefit. I hate to say this, but it gives the extra benefit of an extra year for Donald and Eric and the Trump organization to accumulate as much of this stuff as possible. It gives an extra year for the administration to accumulate as much as possible. So why would anybody expect the cycle to peak before a year from now? I literally don't understand it. My head hurts when I hear it. I know that that's what technicians say. So if you look at that and you say, okay, we got a year for the cycle to peak, what's going to happen between now and then? You're going to get trading. Maybe we get months of sideways action. I think supply demand dynamic on Bitcoin is going to be such that you'll see a rally. But are we going to see euphoria before then? Maybe, but I doubt it. Are we going to see cataclysm before then? Maybe, but it's a massive buying opportunity if so. So that's what I think. I think that the political cycle is going to be the driver here. Now, obviously, if there's a nuclear war, okay, I'm not sure that we'll all care, but it's like we're worried about survival at that point. But take that off the table. And also, just for the record, if you're looking at today's geopolitical situation, markets are pricing in pretty serious crap. When you look at oil prices, etc. I don't think markets are pricing in any chance that the most likely solution will ultimately happen. Because the most likely solution is the moderate Gulf states expand the Abraham Accords. Iran is marginalized because even their allies are dumping them, except for the saber rattling out of China. Yeah, they don't want us to get involved. What happens if you get a more secular government in Iran? Not completely, but more. What happens if there's recognition? Okay, we're tired of saying Literally, Iran has declared has had an actual war footing against Israel since 1979. People don't realize that.
They declared war on progress essentially.
No, no. Iran in 1979 set up their policy that says Israel is not a state. We don't recognize you. Egypt has, Saudi Arabia more or less has, so they probably are close. Iran freaked out on October 7th, likely happened from all the money they got based upon saying there is no state of Israel. People, you probably were wondering, and a lot of people are wondering why we haven't seen the international courts or any of these other, rabidly anti-Semitic organizations say boo about Israel. Well, the answer is Iran declared war on Israel years ago. I mean, they are at a perpetual state of war. Only thing that ends it is Iran recognizing Israel as a country, which I don't know if that will happen this time, but I'm fairly confident that this administration is, and there are lots of things Netanyahu does I do not agree with, but I think on this, I think I do agree. There's no way the hell they stop without a cessation of hostilities, without an actual treaty that says, hey, we recognize your right to exist. There is no fucking way that's priced anywhere near any risk market right now. And it is a non-zero chance that it happens. It may not happen, but it is not even remotely priced in. So you want to know what could cause a massive amount of euphoria in all markets? That would be, and understand partially why. Which country, which is the Silicon Valley of cryptography? It's not
Uh,
a hard question. It's clearly the closest is it's Israel. Look at all the companies in crypto. Where's the
yeah,
technology coming from? I mean,
yeah.
it's just true. So our market is at a bare minimum, if not dependent on, certainly understanding, and that's a reason why a lot of altcoin markets, a lot of things in crypto are more susceptible to what's going on in the Middle East than most, is because Israeli tech companies. I mean, hell, Fireblocks, probably the most important plumbing in the crypto marketplace, is an Israeli company, right? And I mean, the guy, forget politics. I mean, it's just, these are just facts. And so you have to like put all this stuff together. So anyway, the broad answer to your question is I think this political cycle would say peak a year from today, right? I think that the geopolitical situation is going to create some real volatility. And all this is from a backdrop of lots of volatility suppression in the Bitcoin space and lots of moroseness in the altcoin space that has been morose now for quite some time. So that's kind of the way I look at it, which I know is a huge mouthful, and I'm sorry for talking so
No,
much.
I mean, I think
These are the questions you're asking me.
you brought up some really great points. I think I remember when I was at Bitcoin Vegas, Gary Cardone and I were talking, and I was talking with one of the quant on-chain analysts from Ben Cowan's team into the cryptoverse and the Rational Root. We were all talking, and it was so interesting because this is a tangent, but it made me realize something that we forget about all the time. We all have narrow fields of vision on the thing we're doing based on one, where our interests are and what our skills are and how we're navigating a market. So we assume other people are navigating it the same way. And the truth is, there's much bigger things out there that are affecting stuff. And like, why aren't alts pumping? It's not just global liquidity; it's also concerns about what's going on, also where we're at in the political cycle. Because I mean, let's be honest, what we saw from July last year to where we're at today. Not even talking crypto, there has been a seismic shift in culture in the US of what was allowed to what's not allowed to, and then the flipping of that. And then you add crypto on top of that. This is a different universe than we were in July and June of last year for what you thought was possible. And even this asymmetric opportunity in the crypto space now being a real discussion point. It's almost like we had starting point 1.0 back in January 2009, starting point Epoch 2 2.0 January 11th when the ETFs launched 2024, and now starting point, the real stage has been built now where now the world's superpower America is saying, hey, we're all in on crypto, and the world's scrambling saying, and now we see Bitcoin treasuries popping up everywhere. We're talking about tokenizing the stock market. This is all real, and stable coins are getting integrated into everything that you can do with merchants, Shopify, Coinbase, Kraken. I mean, this is where we're at, and we're all wondering on the next 15-minute chart, Is there going to be a dip? Motherfucker, strap in. This who gives a shit what's going to happen in the next 3 week
Right.
period? This is all a
The
setup for higher. Let's go.
I agree. I think that the one thing that matters, and I'll come back to it, come back to the Circle IPO. The one thing that matters, people are going to change from everything going up. I could throw a dart at a board of cryptos. I could just go take out coin market cap and play blind man's bluff, and whatever the hell I touch is going to go up 10x. To answer the story, is this something that could survive a roadshow? Could this survive an IPO kind of build up? Could it survive being a public security that has, everything to it without the founders being able to float 98%, hold 98%, float 2%, and jam the price up to make people think that it's valuable? It's like, and you're laughing, but we all know that
It's
that's part of the
it's
game.
it's yeah.
It's the game. Once you get to the point that there is a handful to probably more than a handful of assets that are delivering real value to their holders, that are not manipulated, and people can understand that, those assets are going to get valuations dramatically higher than they are today. But if you can answer the question, other than with Bitcoin, where I think we all are there already, if you can answer the question, okay, I am absolutely confident that this crypto asset fits that profile, then you should be buying it with both hands and strapping in. If you can't say that, well, then you kind of are at a different situation. And I think that's where a lot of investors are today. People in crypto who are used to the game kind of know the music is sort of stopping on that game, but also know that the entirety of crypto, the entirety of the asset class, is going to be 10 to 20x what it is today in the not so distant future. So the question becomes, is it Google, which it doesn't exist now, some new token that's going to be done? Is it, whatever you start, whether it doesn't matter. And you and I do spaces all the time with, talking to deep in companies and gaming companies and all these other ones that have tokens that allow you to participate. Some of those are going to be gems of investments, absolute 10 to 100 baggers. Some of those are complete and unadulterated crap, depending upon where it is. And so figuring that out is going to become exceedingly important, far more important in this next cycle. I'm trying to do air quotes, cycle, than in the past. That's really the point that I want to make. I think that we have reached a line of demarcation, such like we reached in 2000. In 2000, before 2000, if you had a company and had a website, people gave you valuations based off of just ridiculous things. But by 2001, having a website didn't matter at all. They just assumed you had to have it. But yet, if you look at the aggregate market cap of companies that were primarily based upon internet technology in 2010, even after the global financial crisis, you pick your number 5 to 10 years out, it was way higher than 2000 and 2001. 2001 was after a big crash. So it's just a big difference, right? Crypto is going to follow a very, very similar thing. Is that the NASDAQ?
No, this is Amazon. It's a perfect point.
Oh, yeah.
It's a lead into the dot-com bubble. Oh my God. But what happened was Amazon had real value, even due to the sell-off, had real value. This is when it was over. But then you see, I mean, look at this. I mean, this was a top $5, dropped down to 25 cents, 27 cents. And we're sitting here today at a $208 valuation,
Right.
$208 stock. And I think the greater part of the altcoin market is going to do this probably a couple times. And as you said, the utility, the ones that could be self-sustaining without any involvement from the coin founders themselves of buying or selling tokens. What has utility? What is driving revenue? If it was a publicly traded company, what are the metrics that says, hey, this actually shows it has good value that projects out over time?
Yeah, I have only one slight quibble with what you just said. Yes, I think that's true. But I also think that crypto has opened up a third channel. Companies today, if you want to raise money, you have more, it will say in the US now. So it's outside the US are doing some of this. But if you're in the US, you have you have two choices. You could sell debt or you could sell equity. And yeah, there's hybrids in between the two. There is a third choice, right? The third choice is, and by the way, those hybrids include derivatives like converts and others, whatever. So I don't want to get a lot of hate mail. Yes, I know it's a more complicated, but it still has two primitives. It's equity and there's debt. and then there's options upon that. There's a third primitive, which is selling percentages of a revenue stream, or the flip side to that, selling uh, assets that are going to be needed to buy, that's whose value is going to be driven by the efforts of that company. That's the BNB kind of model, right? You know, you need to hold it to be able to get reasonable prices, et cetera. Call them discount, call everything. It's basically pulling revenue from the future into the present. And that is a perfectly viable thing that makes a whole lot of sense. It makes it more sense for distributed networks or open source networks than it does for singular companies. But make no mistake, the capital structure of companies is going to change forever, because companies that are, let's say you're a conglomerate and you have multiple business lines and you want to open a new business line, and you don't want to take the risk of diluting your existing business lines. You have the option to make that next business line codified by smart contract into a security. It would be a security because it's from a corporation. It's not equity, it's not debt. We need new rules, but we have an administration who wants to create new rules. So why not let companies do that? That's going to happen, Cal. It is 100% certain because the technology allows it, and it's a level of flexibility that really will help companies expand and do things and compete. And so whenever there's technology that fits with a business niche, it's going to work. But right now, the legal world doesn't allow it. Our regulations are so outdated, you can't do it. That is going to change. So
That's
with that caveat, I agree with everything else you said.
Dave, this has been such a great conversation. Anybody out there, I definitely recommend you follow Dave. I'll pull up his thing again, Dave Weisberger. I don't know where your name thing went. Hold on, right here. Here we
At
go.
Dave Weisberger won for some reason.
Yeah, at Dave Weisberger one. But the Genius Act, for those, we talked a bit about it at the early part of this discussion. I just want to re-emphasize how important this is, because as he just mentioned, to tie this whole conversation up, we've been operating on basically regulations from almost 100 years ago, essentially for almost 100 years. And we're just now getting to the stage where we have technology and an administration in place, where we have an act that's already been voted through the Senate. It's going to the House. President Trump is, quadruple, double, triple down, double down on this. Get this to me. Let's sign it, because this is basically the new platform for the next 100 years, maybe beyond, of the financial future. How we can integrate this new technology, develop new profit streams, develop new access for all of you retail mom pop business structures. This is the new world. We're a part of it. What is the new world order? It feels like it's decentralized, and we're all a part of it. But all we can do is make sure that we talk to people like Dave, talk to people like Scott Melker, talk to people like Gary Cardone. Everybody has a slightly different view on this. We get to figure out what works best for our own strategies. But God dang, I always love talking to you, Dave, because it reminds me how much I have to learn. And you always have such great thoughts on everything in this market.
Well, age has, other than the fact that my knees are a bit creaky and I'm putting a desk together, and I have to do it from a chair. Like I go to the gym every day. Things are good, but the one thing about age is I've actually seen this. I've lived through two epochs of investing history. The first wave of automating the back office, which was the 80s to the 90s, and then the next wave of automating all trading, which was the end of the 90s through the 2000s. And so I saw all that. And now we're going through the same thing in the crypto world, which is going to be effectively like the automation, but on steroids. And a lot of financial companies, which are still operating on models that were born out of the desperation of the Great Depression. And when you talk about the 34 Act, which is what you referred to, so it's 91 years ago, are the rules that is and the other one was the 1940. So you got the Exchange Act, and you have the Investment Act, in terms of how funds are operated. They're all operating over rules that are incredibly outdated. The last major set of reforms, if you don't count Reg NMS in 2005, which was very narrowly focused, was in the 70s. I mean, when I'm one of the oldest people that I talk to on a daily basis in crypto, and even in the traditional financial, I'm no spring chicken. When the rules that we are governed by were last updated before I wasn't even in high school. I mean, just think about that. I mean, it's fucking nuts. And so yeah, we have people who understand it. Now the good news is the current chairman of the SEC, Paul Atkins, understands this. and he's, I guess, a little older than me. I think he was in college when those rules happened. But maybe, I don't know. Maybe it was more. I have no idea. But the truth is that he understands this, gets it, and understands viscerally that we need to update our financial asset protections for investors to understand there's this thing called the internet. I mean, do you realize we still have an IPO process that has a 30-day cooling off period from the time that you go to publish a prospectus to the time you're allowed to offer the securities? You know why? Because back then it took 30 days from the time that you started, you typeset something to the time that you could actually publish the damn thing and get it distributed around the country. I mean, seriously, you have rules that are based upon that didn't even understand the fact that we could have a video conversation here. That this is science fiction in the days that the rules were written. And so, of course, they have to change. It doesn't take a rocket scientist. Anytime you get people saying the opposite, they're morons, or at least acting like a moron. Like Gensler, who's a very smart individual, he kept saying, we don't need new rules. Well, that's the dumbest thing that's ever come out of his mouth, to the point where I know when he looks himself in the mirror, he knows, he probably says, I wish I had never had to say that and be forced to defend it, because it makes me look like an idiot. Because in
Yeah.
fact, an IQ above maybe 80 could understand why that's so stupid. By the way, IQ at 100 is bog average, and so it's a log scale. So if you're below 80, you could barely walk and chew gum at the same time. I mean, it
Yeah, I
really
mean,
is
it's
a
like
crazy
we've
idea.
got technology these days, which is basically beyond a Ferrari, trying to put it in basically a wooden go kart. It's just it doesn't work. You got to build a new chassis. You got to build it from the ground up. And I'm glad that we're not augmenting old rules. We're taking them as advisement. I'm sure they are in some capacity. But okay, we need to start from the ground up. But there's a lot to come. I
Yep.
mean,
We'll have to have a conversation on rulemaking when we start talking about the market structure bill. So we'll get
oh,
back on and talk about the minutia. The only thing to think about for today is we are moving towards a financial future that is digital. And so you should invest accordingly. And so if you're buying or selling and you're a professional trader and you have tight stops and you don't overuse leverage, by all means trade the range, right? Which, by the way, would have you buying it around these levels if you're Bitcoin, and then lightening up again at $5,000 more and just kind of trading the range. If you're investing in alts and you have good information, or people you trust who talk about what the utility really is, cool. Otherwise, be very well aware of what you're buying and what you're selling. That's my major advice to people. Doesn't mean there's that everything is uninvestable. It isn't. It's a question of time frames, approach, and how. There are lots of people making money trading this market. It's a trader's market. Investors beyond Bitcoin investors have been having a very tough time.
I love it. Well, everybody, I appreciate every one of you that's tuned in for this. Again, Dave Weisberger, excellent conversation yet again. I hope you have a wonderful weekend. I look forward. I'm sure I'll be on a number of spaces with you over the next couple days, and we'll have you back on here again soon. Get back to building that desk. I'm bullish on you being in more comfort when you get that desk done. But we'll see you in the next one. I appreciate you. Everybody, hit that like button on the way out. Make sure you check out at Dave Weisberger1, and we'll see you all in the next one. Adios, everybody. Thank you for tuning in on a Saturday, everybody. Big love to each and every one of you. Make sure you drop a like and subscribe on the way out. Got the links to join the Discord, join our different trading exchanges, VPNs, everything's in there. Hope to see you guys in the Discord. Hope to see you guys outside of the charts. Get out there, touch some grass, hug a puppy, kiss a friend. Have a wonderful Saturday, everybody. Adios.